Hello everyone. Good afternoon. Can we all hear me?
Yes, sir, we can hear you.
Yes.
All right. Thank you all for joining. Welcome to class. We are happy to have all of you in today's session. All right. And we'll be starting right away. All right. So not to waste any more time. Right. I'll just do well to give us a little bit into the agenda for today, what we'll be dealing with and what we'll be dealing with in today's class, and then we can go over to the rest of the class. So in today's class, we'll be talking FinTech business models, profit models, and FinTech sector spread, right? That's what we'll be discussing in today's class. And for our agenda for today, we'll be having introduction of mentors. Like we'll be introducing our mentors for today, and then we'll take presentations for mentors. We'll take presentations for mentees. So please, mentees, do well to be paying attention so that when it is time for your presentation, you can quickly come on board to make a presentation. After we have presentation from mentees, we'll have feedback from mentors. After feedback from mentors, we would have questions and answers, and that will be that for class, right? So I hope you all are ready. If you have friends that are supposed to be here, co-mentees and friends that are supposed to be here that are not here, please do well to reach out to them so that they can join in for the class. So we'll begin all by reading the profile or just introducing our mentors generally. So starting off, we'll be having Mr. George Onyewuchi. Mr. George has been quite busy, so he has not been able to join us in the last few classes. But we look forward to having him in today's class, and we hope he's able to still come on board. Right. Our second mentor for today, who happened to be in class yesterday, was Mr. Tunde Kelani. Mr. Tunde Kelani would be our second mentor for today. And last but not least, and the mentor we already have in class, Miss Mariam Hassan. Right. For this particular class, she's a new mentor, but to the program, she is no stranger, or she is no stranger to us. We are really, really happy to have you in class, Miss Mariam. Miss Mariam, so Miss Mariam Hassan has 10 years plus experience in financial service and payment sectors, and the payment sectors, right? She is also known for developing methods that accelerate the development of ideas into business ventures, building strategic partnerships for business growth, and with a track record of driving growth in competitive, fast-paced environments. She is a skilled digital transformation, innovation management, and strategy professional, and holds certifications in digital transformation, innovation management and strategy, and an MSc in innovation management and entrepreneurship. She is an automobile enthusiast who enjoys traveling and reading. She is also very passionate about giving back by impacting knowledge through any means available, and is inspired by women in position of power. So in position of power, so Miss Mariam is going to be one of our mentors for today. Thank you so much, Mark, for joining in for the class. We are happy to have you on board. So not to waste our time, right? Like I said, what we'll be doing is that we'll be taking presentations from mentors firstly, and then we would go over to mentees presentation. So just to break the ice, right? Break the ice and start off with class. Miss Mariam, we would like to welcome you for your introduction into today's session and what you have prepared for us. Maybe in the next 30 to 35 minutes, if you kindly do well to share with us, we will really do appreciate you. You're welcome on board now.
Thank you very much. Can everyone hear me?
Yes, ma'am, we can.
Okay. Thank you very much. Good afternoon to everyone on the call. It's good to be here again. My name is Mariam Hassan, and like Dennis said, I'm not even aware if this is a new class, but I know I usually take the FinTech business model and profit model and FinTech sector spread class. So happy to be here again. So he has read my profile, so I don't need to introduce myself. I'm currently taking I've been on a career break for a bit and just spending time exploring other opportunities, both within and outside payments, right? So I used to lead FinTech business and partnerships. That's the API business and handle payment strategy and partnerships at Leatherback before I left. So thank you, Gypsy, for the opportunity once again to be here. It's always exciting to mentor for, different quarters. So it's always also a joy to have conversations about the FinTech, industry. So I'm just going to quickly share my screen and just sort of talk through what I have. And I'm going to stick to 15 minutes because I saw that in the agenda, mentors are supposed to just stick to 15 minutes. So I will do that so that we can wrap up. So give me a minute to share my screen. Okay. Can everyone see my screen, please?
Yes, ma'am, we can.
Okay, so today's topic or today's discussion for me is around FinTech business model, profit models, and the FinTech sector spread. And what we're going to be talking about would be around what is FinTech business model, what is FinTech profit models, and FinTech sector spread, and what is next for FinTechs. So what is FinTech business model? But before we start with what is FinTech business model, I'm sure everybody on this call already knows what FinTech stands for, which is financial technology, right? But what is a business model? A business model basically is just when you're starting out a business, what do you need to put in place, for that business to be successful? So what a business model does is to help you check every part of what a business is about. So a business model more or less fits into a business plan, right? We all know what a business plan is, which are the things you need to put together to start your business, which covers different sections of what the business would be about, like who is your customer segment, who are you looking to target, what would be your growth strategy in terms of how you intend to take your business to your customers, right? What is the market size? So when you're looking at market size, you're looking at your total addressable market, you're looking at your serviceable addressable market, and you're looking at your obtainable market in that entire market. So for example, take Nigeria as your industry or the market size you're looking at, right? So in Nigeria, who are you focusing on? What sector are you looking at or what industry? And in that industry, what is the target market that you're looking at? I saw in one presentation that somebody's focusing on financial inclusion. So in the financial inclusion sector now, for example, who are you looking at? The underbanked. The underbanked are people who probably don't have, unbanked rather, who don't have bank accounts, or even if they're underbanked, people who have bank account but don't understand how maybe the use case for what that bank account would do for them, right? So it's narrowing it down. A business plan is all encompassing, but what a business model does for you is allows the company to understand how to create value, how to deliver value, and how to capture value. And in the next slide, we're going to be looking at what a proper business model is, right? So the long and short of it is a business model basically just allows you to understand how to create value, how to deliver that value, and how to capture value in terms of how you make money from that business. So a fintech business model in this sense still allows you to create, to deliver, and to capture value, but they are designed specifically for the financial service industry, if that makes sense. So it means that a business model, you can do business model for any sector, for any industry, but today we're talking about the fintech business model, which means that it's the same thing. You're creating value, you're delivering value, but the definition of value in this case is different, right? So it means that the business model you develop for a business in the financial sector is different from the business model you develop if it's an e-commerce industry, right? So if you're looking to sell products, for example, your business model will be different and your definition of value will change, right? A business model enables a company to describe, to design, to challenge, to invent, and to pivot. So what this means is it allows you to describe what is your company about. It allows you to design what the company is about. It allows you to also challenge, it allows you to invent, and it allows you to pivot. So if you've developed a business model to say today, I want to go into digital payments, right? I want to build a mobile app for people to be able to make payments. And once you launch and go into market, you see that maybe there is a mismatch in terms of product market fit, and you want to pivot from providing mobile app or digital payments to people, and you want to go into lending. A business model also gives you the bird-eyed view to be able to know how to pivot from what you initially launched with. So FinTech today, as we know it, has transformed the financial industry for the better, right? From digital payments to lending, to investment, to insurance, to remittances. The financial technology sector has transformed financial industry. So in a way, they're giving the bank a run for their money, right? So before the fintechs gained some sort of traction or ground, we know that the banks were, when you think about finances, or you think about money, or you think about payments or savings, the bank comes to mind, right? But today, what the fintech industry has done is to sort of disrupt that sector, right? Which also makes it easier today for us to be able to get money. So today you want to start a business and you're looking for a loan. We know the process that it takes to go to a bank to be able to get loan, right? So today we have lending companies, lending companies like Fair Money that can also allow you to collect SME loans or business loans for you to, put back in your business without going through the hassle that a bank would give you today, right? So this is what a typical business model canvas is. And this is a business canvas by Alexander Oswalder, right? It's one of the most popular business model canvases. And what it does is it captures everything that is needed for you to for you to know if the business that you're trying to go into is viable or not, right? So if you look at every aspect of this business model, it talks about one, which is, one that's very important, your customer segment, right? So today, if you want to start a business, you need to be able to identify what is that segment that I'm looking at to target, right? So we would use a payment company, for example, right? I would use financial inclusion as an example. Now you want to start a payment company today, and you're looking to focus on, the financially excluded in that sector. What it means is that you're targeting people who do not have bank accounts, right? Now, people who do not have bank accounts would, in this case, be your target customer segment. So for every business that you want to start, especially for the financial sector, you need to be able to narrow down what is the target market that you're looking at, right? Who are you focused on? What is the customer segment that you're looking to provide solution to a problem? So it starts with identifying what the problem is. What is the gap that exists in that industry or in that sector? You've seen that there's a gap that exists, which is that people are unbanked. Some certain category of people or sector, people who fall under a particular category are unbanked. And that's a problem that exists. Why are they unbanked? It could be that the requirements that a bank wants today to be able to bank them are the requirements are too high, right? They're requiring for ID, they're requesting for proof of address, right? They're requesting for a lot. And because of the things that the bank are requesting, the people who fall under the unbanked sector are unable to provide it, which is the reason why they remain unbanked. So you've identified that problem and you say, what, this particular segment of people, I want to be able to provide a service that can bank them. So it means that you've identified a particular customer segment that you want to provide this product to, or is the reason why you're starting this business, and that is the solution that you're looking to provide to these people. So that is where the customer segment falls for a business model canvas. You need to be able to start with that first. Now, when you identify who your customer segment is, how do I intend to relate with them? Now you look at that segment, most of the people who fall under, the unbanked probably do not have smartphones, right? They probably have little to no access to electricity to even, maybe charge those smartphones, which maybe the life power of their phones do not last for a very long time, right? Compared to your Nokia Palasa that we're all familiar with, right? They have little to no access to internet, right? So it means that how do you bring this product to this unbanked? Do you want to develop a product that allows them, even on their phones, that's their Nokia 3310, for example, that has no connectivity to internet? Do you want to develop a product that allows them just send or dial a code where they can still be banked? So it means that whatever service that you're looking to render, how do you take this service to them? That's your channel. So it means that for different businesses or for different sectors, there are different ways you want to be able to reach your customers, right? If it's a business, for example, you're developing a product for a business, one of the ways you want to be able to reach them is through a website, right? So the channel basically just focus on how do you intend to take this product that you're developing to this customer segment. So people who fall under the unbanked, for example, you're developing a platform which is probably a USSD string that they can just dial on their non-smartphones to be able to open accounts, to be able to transfer money, to be able to save, right? So that's the channel that you're looking to take your product to them. Now, how do you intend to relate with them? They are not online. So what it means is that they cannot probably access your customer contact center, which is what we're familiar with banks. If today you want to reach your bank, is that you're calling the customer care line or you're walking into the bank branch or something, right, to be able to relate with the bank. Now, in this case, they do not even know how to dial numbers, how to call people. Do you want to set up shop close to the area where these people are so that, you have maybe like a kiosk where people can come to the kiosk to have conversations with them around maybe some of the issues or the complaints that they have? So your customer relation really is, how do you intend to relate with your customers? Is it through, customer care, contact center? Is it through emails? Is it through AI chats, right? Depending on the business that you're doing. Now, what is your value proposition? The value proposition is really the reason why you're in business, right? So what are your unique selling points? This business that you're looking to develop, this USSD string, for example, that you're looking to develop for the unbanked, right? What are the value proposition? Because your value proposition is really what differentiates you from every other person that is probably doing the same business trying to bank the unbanked in that sector, right? So what differentiates you? What is your competitive advantage? What makes you different from the competitors, right? What are your value offerings? What are your propositions? What is it that makes you different from the competition? Why would an unbanked person be willing to dial the USSD string that you've developed to be able to get banked and to be able to also process transaction? So that's what your value proposition is, which is the most important one of the most important part of your business model, right? What is the value that you're looking to create, right, through this business? If you remember in the beginning, I said business model allows companies to create, to deliver, and to capture value, right? So what is that value that you're creating for these customers or these customer segments that you've identified? Then we have the key activities. What are the things that are required to be done to develop this USSD string to be able to bring this product to the customer segment? One, you probably need to get a USSD code, right, from the NCC, right? So it means you have to be able to buy the code, which is maybe dial star 100 hash, then, a certain sequence of number. So what are the key activities that are required for you to do to be able to develop this product is what falls under key activities. What are the key resources that you need? Do you need to get a software developer, right, who would develop this USSD string? Do you need to partner with a bank? That's where key partnerships also comes in. So you have key resources. What are the resources required to develop or to build this business or to create, to capture and to deliver this value, that you want to deliver to your customers? Who are your key partners? Are you going to be working with the bank? Of course, you would work with a bank. Every fintech today still has the leverage on a bank, right? Because the banks are the only ones that are sort of allowed to keep funds depending on the license that you acquire as a fintech, right? Aside that, there's also a lot of technology infrastructure that the bank provides that most fintechs have to leverage today. So your banking partner can be one of your key partners. The NCC who provides the USSD string can also be a key partner, right? You have to be able to identify all the partners that are required to bring, this business to life. You also have the cost structure. So you have to be able to identify what is the cost, right, that is required to bring this project or this business to life. You say you want to bank the unbanked, right? You want to set up USSD string because they do not have smartphones. They have low or little access to internet, right? So what is the cost that is surrounding that, which is also very important, right? You need to pay for the USSD string. You probably need to be able to pay for maybe some of the services or the API connections that you need to get from the bank, right? You need to pay for where maybe data will be stored in terms of the data that you collect when the USSD string is dialed, right? So what are the different costs? The software developer you're going to pay for, who will develop this for you, payroll is also part of the cost, right? The licenses that you might need to get to start this business to be able to bank the unbanked is also a part of your cost. So you need to be able to look at all the costs that is surrounding this business that you're looking to start. Now, what are your revenue streams? How do you intend to make money? We're going to look at the profit models much later in the slides, right? So what are the revenue streams? How do you intend to make money? So if you bank these people, do you want to charge them for every account that is opened through this USSD string that they dial? Do you want to charge them for every transaction that they perform through that? Today, when we do interbank transactions, your bank will charge you, right? Depending on the amount that is being transferred, your bank will charge. I think they charge you, is it 15 naira plus VAT if you're transferring anything above 50K. If you're transferring anything below, I think it's between 10 naira and 25 naira. So those are, those are fees that are charged on every transaction that is processed, right? So you need to really identify what your revenue stream is. Now, when you're done with your business model, you need to also now ascertain what is the risk, right? Does my cost outweigh my revenue? Does my revenue, the revenue that I make from this business, does it also cover the cost? You need to also be able to check what the viability of your business model is. How visible is it to be able to bring this to market, and how valuable it is. But everything that I have said is a lot. I've said a lot of things, but at the end of the day, what really matters is that you're able to launch this business, take it to market, and check for product fit, product market fit. Because you can do all this, design all the business model that you want, and by the time you go to market, maybe your product is not even accepted. Maybe in another 6 months, you need to pivot from what you had initially started. The truth is, at the end of the day, the market is what teaches you almost everything that you need to do, right? You can have a fantastic business model that you've developed, a fintech business model to bank the unbanked. But the reality is really when you put this product to market and how it is accepted by the same customer segment that you've targeted. And you need to also be able to learn, right, every time you put it out. I'm sure maybe we've come across the word MVP, which is a word that's, very used in the fintech space, where you talk about your minimum viable products, right? So you need to be able to take whatever you've been able to develop, put it to the market, and now start to iterate from that. You start to get feedback. You start to gauge the usage of the people and how they accept this product. And in the long run, your business model is not cast in stone, because you might find that in under 6 months to 1 year, you are having to come back to change a lot of things depending on how the market accepts it, right? So I just put here as an exercise for us to be able to, look at to develop our own business model depending on whatever business that you're looking to do. But today, because we're focused on fintech, most of the things I've had to talk around the business model is, looking at the fintech space, which is banking the unbanked, and that is more or less like digital payments, right? So what are your fintech profit models? In the business model canvas, I talked about your revenue streams, which is how do you intend to make money? So you want to bank the unbanked. You want to develop a mobile app that helps you bank the unbanked, allow them carry out transactions, maybe even allow them get mini loans or micro loans, right? But how do you intend to make money? Now, there are several ways in the fintech space that you can, make money depending on what your business is about. You have the subscription, right? So it means that if you're a software as a service provider, for example, right? Maybe your AWS or your Microsoft or your Google or whichever you're using. More often than not, some of them are layered on the subscription model. So it means that you have to pay a certain amount every month to be able to use the platform, to be able to use the service that they provide, right? So subscription model is one way, it's one of the fintech profit models of, making money. But looking at our unbanked products that I've been using as an example to talk through, what type of fintech profit model do you think would be most appropriate for them? Probably commission, probably from transaction or fees or usage fees, right? So it means that when customers carry out payment transactions or they dial the USSD string, for example, to open an account, do you want to charge them for the account that is opened? Do you want to charge them for every transaction that is carried out using I keep using USSD string, I keep using non-smartphones, because we also have to be realistic that the unbanked or the people who fall under that sector might not, have smartphones. And even if they have smartphones, how much is data today, right? We know that data is really expensive. If the same people that you're trying to the same people who are unbanked you're trying to bank, and they're having a tough time, buying data to be able to access the internet, to access the same service that you're trying to provide for them, they might as well just, abandon whatever service or product you're providing and keeping their money maybe under their bed or their pillows or wherever it is that they keep their money. So just to be realistic, if you have to develop a product for the unbanked, it's better to just look at what their current situation is and develop a product based on that. So in terms of coming back to profit models, how do you want to make money? Do you want to make money on every transaction that is processed through the phone, through the USSD string? So you have advertisements, you have licensing. Sometimes it can be a software that you've developed and you want people to be able to pay for the license to use that particular software. That's another way that fintechs make money if you're a software company, for example. If you're also say maybe a lending company. Some of us have probably gone through some of our banks' mobile apps or online banking, and some banks also leverage that platform to advertise something to you, right? That's also a means to make money. So they can even partner with different providers that maybe they have complementary businesses with the banks, and maybe decide that they want to even charge them to advertise them on their platform. Today, some banks have probably over 1 million users downloading their mobile apps or using their web platform, right? So it's a means for you to be able to market whatever you have, through their platform, just using that as an example. So fintechs can also make money through advertisements, depending on the kind of business that you do. You can make money from licensing, you can make money from commissions, you can make money, but the most popular ones are the ones that I've highlighted, which is subscription, commission, or transaction fees. So it means that in your fintech business model, you have to be able to identify which of the profit models it's the most appropriate for, whatever business it is that you're doing. Now, coming to the fintech sector spread, the fintech industry we know is expanding rapidly. It's perhaps one of the most popular sectors in Nigeria today. Every now and then people are coming up with different solutions, right, in the financial sector, looking to solve different problems. and it receives majority of the fundings for startups at the moment, right? The fintech space receives majority of the funding. The sector has also attracted well over 500 million USD and has had a huge impact in the economy, right? If you're looking at the whole of Africa and you want to talk about one of the countries that is maybe gaining a lot of grounds in terms of financial technology, you would think Nigeria, right? That sector, the fintech sector in Nigeria, sort of opened up Nigeria to the world. So know that a lot of payments, a lot of fintech products are also, coming out of Nigeria. Every now and then you're hearing about how people are trying to change things and, solve a lot of problems in Nigeria. According to Statista, the market's largest segments would be the digital payments, right? Which is providing payments platforms for people. And it has had a total transaction value, which is projected to reach around $68 billion in 2025. As of March 2025, Nigeria has approximately 430, and that's like growing from, I think, 217 in 2023. So it means that every now and then, every day, people are developing products to solve problems in the financial service industry, right? And Nigeria has kind of accounted for over 44% of the fintech startups, and the funding has attracted over 1.5 billion, right, in that industry. So what is next for fintech, right? Artificial intelligence. We know that AI is sort of, transforming almost everything. We're at the point where if you don't have maybe AI chatbots or some sort of AI embedded in whatever you have, then it looks like you're going behind. We know how much open AI is gaining ground, and a lot of them that are catching up. We have AI now for almost everything, right? Even in today, people can get what's it called, portrait pictures, corporate portrait pictures, proper corporate pictures using a chat bot, right, to be able to develop that. So it means that whatever you're developing now in the fintech space, you have to find a way to embed AI into it, right? It's going to further infiltrate and improve fintech, really. It's going to help to enhance a lot of things and make things better. In Nigeria as well, open banking, it's still, it may be not as progressed as, the West, like in the UK, where open banking is it is seamless, and it's already, the adoption for it is like way high, but in Nigeria it's still in the early stage, but I think it's gaining ground. We have buy now, pay later, we have contactless payments also gaining ground. I know a lot of banks have, tried to improve on that, and they're still working, but the truth is some of the Nigerian bank cards that I have, when I travel, it's the tap, the contactless payment doesn't really work as much. It's not as efficient yet as some of the cards that you use abroad, but it's gaining ground. Digital currencies are even they're looking more than promising now. Everybody is hopping onto stable coins and the likes. So at this point, I would bring my presentation to an end, and let me know if there are any questions, or I'll just hand it over to Dennis.
Thank you so much. Thank you very much, Ma, for a very wonderful and very detailed. It was fast, but a lot of points were highlighted, and we really, really did enjoy your presentation. I hope from the sides of the mentees, they were able to pick up several things from what you shared, and they were actually looking at your presentation. So we'll be going back to both of our mentors that we're expecting in today's class may not be able to join us. All right, so what we'll be doing is that we'll be taking presentations from mentees. So please, group presenter for group one, come up, share your screen, start your presentation. After we're done with group one, we'll go over to group two, and then we'll head back to Miss Mariam, and later on we'll take questions. So please, group presenter, you can go ahead, share your slides, and start your presentation. Who is presenting for group one? Okay, if the group one presenter is not yet ready, please can we have group two's presentation?
Sorry about that. The phone is ready.
Noise in your background.
Yes.
Yes, we can hear you now.
All right. I am Peter Igmobowe, and I am the presenter for Group 1. So today we'll be talking about FinTech adoption and impact on SMEs, FinTech adoption and impact on SMEs, small medium enterprise. So like we all know, FinTech is coined from or is a combination of two words, finance and technology. When you join them together, it's simply the inclusion of technology in financial transaction. In the course of this, we'll come across the evolution of fintech in Nigeria, regulatory landscape, case study, and of course, recommendations and conclusion. Like we all have, we used to have previously the traditional banking system where you would see persons going to the bank in order to access their money. You see long queues and the likes. Humans have always craved for a way to have access, have comfort, and of course have speed when they want to do anything pertaining to finance. And the traditional banking system at some point was able to provide this, but due to the large influx of persons that wishes to make use of their service, there was a bit of lag in performing these transactions, and this led to long queues in bank, some personal issues between customers and those working in the banks and all that. And necessity, of course, is the mother of invention. Whenever there is a need for an alternative measure to comfort, people always think and people always be creative in order to find that. Hence, some persons, of course, thought of ways to solve these long queues, solve these issues between customers and banks, which has a wide pool of stuff included in it. And so people began to think. Then we had fintech companies emerging in Nigeria. And one of the things that birthed fintech companies in Nigeria and promoted its rapid growth is the CBN cashless policy 2021, which of course it was aimed to reduce the handling of physical cash and deal with more of handling cash digitally. The reason for this, of course, there are numerous, one of them being security, and another being, I think, costs, because it's very costly to print money. It's also very costly to transport money and also costly to secure money in itself. So many factors contributed to the CBN enacting the cashless policy in 2021, which in the long run tried to reduce withdrawals for persons. Some bank had a limitation of what you can withdraw in a day and all that. So fintech started exploding from here because they were able to evade such, since we are looking at a digital platform where one can transfer money. So that's made fintech to explode in a way. Since bank could not keep up with their withdrawals, fintech were able to make these things easier and faster. Like I said earlier, humans always crave for comfort, or they always crave for speed, and they always crave for access when it comes to their finance. And fintech has been able to provide this, not just providing it, but providing it better in comparison with banks. And so on a global scale, of course, in the 20th century, moving from Nigeria on a global scale, in the 20th century, we saw credit cards, SWIFT, online banking. All those are offshoots of innovations of FinTech, the financial technology. In 2008, in the US, where we saw the financial crisis, it also opened doors when we saw a major crash in banks in the US, and there was a little bit of distrust between customers and banks. People were looking for better ways, to carry out their financial transaction. That propelled fintech to emerge and to bring out new innovations. In 2010, we are talking about smartphones. You no longer need to go to the ATM stand in the bank to carry out transactions. People now had smartphones, and the fintech industry is so innovative that they look for the most accessible thing that they can embed their technology, and people can access it easily. And one of those things is smartphones. Smartphones is literally almost everywhere in the country. And so we saw fintech creating apps that were embedded in smartphones. You just go to your Play Store and then downloading it rather than standing in an ATM queue in the bank. So this period was a very significant period in the evolution of fintech in Nigeria, and it is what has dragged us or led us to this very moment to find ourselves, where we are seeing a massive boom in the fintech industry. Now, moving on to fintech business models, our speaker has said beautiful things concerning it, and I couldn't even help but I started jotting down things that she was saying. I think I wouldn't dwell too much on this since she has done justice to it. But I would just say that for the purpose of my presentation, when your bank as it is, they perform numerous transactions. You're looking at deposits, you're looking at saving, you're looking at investing, you're looking at cross-border transactions and all that. So fintech coming into this financial sector, most of them, what they simply do is they dissect the functions of the banks and then specializes on one. So it's what I like to refer to as dissecting and specializing. For example, you have the digital banking platforms. Normally, banks also have their banking platforms, their digital banking platforms. You're looking at the ATM machine. Of course, you're not dealing with somebody. You're dealing with a digital machine there. But we are now seeing a movement from the ATM machine down to mobile apps, where fintech has been able to specialize solely on this. They do not engage in the physical aspect. They specialize solely on that aspect of that function of a bank, and they are making money from it. You're also looking at payment and money transfers through Remitter, InterSwitch, and Fair Money. You're also looking at digital lending platform. This is, like I said, this is one of the numerous functions of a bank. But what some fintech industry does, they look at, okay, let's focus on this particular aspect, which is the lending aspect. And they don't just take on or design their business models just to exist. They try to do it, not just do it for doing sake, but do it better than the bank. The financial industry is very competitive. And so whatever you're doing, you shouldn't just do it, you should do it better. And for the fintech industry to do it better, they try to reduce the bottlenecks from persons trying to obtain loans from banks. Of course, if you want to obtain loan from banks, there are several bottlenecks you have to go through, several paperwork and so many things. But in trying to do it better, fintech companies try to reduce those bottlenecks. And so we are seeing a surge in persons that want to get loans. They try to tilt more to fintech rather than banks, because most of them do not have these requirements when it comes to obtaining loans from bank. I think there was a time we saw videos on social media of people complaining that PalmPay is trying to harass them and what have you. The reason for that being PalmPay had their own way of giving out loans, and it was very much accessible. But the process of recovering it, of course, there will be difficulties in that when you reduce your standard in giving out money and you don't provide some, securities in doing so. So we saw a whole lot of funny things. But in summary of all what I'm saying is they looked at a particular function of a bank and then they specialized in it. You have several examples, of course, like savings. Your normal bank does savings, but you see some fintech business model being designed purposely for saving. You see CarryWise, and then you see PiggyVest, and they go further to include another function of a bank, which is investing. They provide avenues where one can invest. So these are various fintech business models that have been structured to perform a certain amount. And like our speaker said, in trying to structure this, you also have to look at the target customers. For the fintech companies that they are looking at those that cannot easily access loan from a normal bank, they bring about their loan platforms in order to get that. And for those that are unable to, perform one or two transactions, the fintech industry brings another platform to address that service and what they like. So now moving on to the impacts of fintech on SME growth, small medium enterprise growth. The small medium enterprise growth, of course, we are looking at improved access to capital. Small medium enterprise, most of them, they find it difficult to get capital to start up their business. From banks, of course, they find it difficult to get capital for that. But when it comes to fintech, you look at some fintech companies, it's very easy to get that. In short, if you're going through YouTube, you see some ads that will pop up and they are telling you about loan, catch, and the rest. And they are telling you about some scary interest rates that they are going to, structure as regards your loan and all that. So improved access in capital. This is one of the effects or the impacts fintech has on small SME in Nigeria. Lower operating cost, of course. Some SMEs, their location are not somewhere that they can easily access, banks. They do not have, of course, I think at this point in Nigeria, it will be impossible to have banks almost everywhere. It is almost impossible to have it currently. So those places that do not have bank, you look at persons paying transportation to, let's say, another city or another village or another community in order to access it. In doing that transportation, you have to pay money. So you're looking at cost. But with the evolution of fintech, you can just sit down in your house, use your mobile phone, and then do a transaction. Or rather than going to queue in a bank, you can easily meet a money point agent and do a deposit, transfer money to another person. So low operating costs is also one of the impacts fintech has on SME. And we also have enhanced efficiency. People become more efficient. You're looking at faster transfers. You're looking at better cash management. These days, some persons will tell you that when it comes to OPay, before somebody press send, they have already sent you an alert. Jokingly though, they already send you an alert that should tell you how speedy they perform their function. So it brings efficiency, unlike having to deal with some banks, in quotes, where if you send somebody money, you're dealing with somebody, the owner of an SME, and then you purchase something from the person, you send the person money, and the person is complaining that I have not seen the money. You have to stay in that person's business environment until the person gets an alert and all that. But you see some fintech companies able to bridge that gap where they give you they alert you instantly the moment somebody presses transfer on their phone and all that. So efficiency is part of it. Increased competitiveness. You have increased competitiveness. SMEs, since once somebody is efficient, it simply means the person is ready to compete. And so fintech has enhanced competitiveness when it comes to the SMEs in Nigeria. Moving on, we have cost saving with fintech, fast payments, just like what I've discussed. We're talking about OPay, easy invoices. You don't need to go to a bank, or if you want to pay, if you want to, like for example, in my school, they wanted to pay faculty dues, and most persons were going to the bank to get a teller. But some other persons, what they did was just they meet somebody operating a money point POS, and then what the person did was when the person did the transaction, person printed out a receipt of the transaction, and that was what they used. So in that context now, bringing out invoice or tellers or what have you, you don't need to go to the bank. You can easily do it with a fintech company, Money Points, and their POS, point of sale machine. Cheaper loans, as earlier discussed, Okach and Fair Money and the rest. So it's very cost saving with when it comes to fintech company as regard in comparison with traditional banks. Revenue growth in fintech. We have the buy now, pay later, which has increased the sales volume. Buy now, pay later. It simply means some fintech company being able to enable persons to purchase something with the intent of paying it, and just like the name implies, a typical example is Easy Buy. A typical example is Easy Buy. They even extend it to the extent of purchasing gadgets. If you want to purchase a phone, you can just easily go there, meet an Easy Buy agent. They'll tell you the amount for the phone you want to purchase, and then you have an agreement with them. They take the details and they purchase the phone for you. They will now bring out a structure in which you begin to pay more like, let's say, in 3 months, you'll be able to pay 50K into our account until it completes the original amount you purchased that particular gadget with interest, of course. So you have the buy now, pay later, which has increased sales volume, cross-border transaction. We have been able to see things, fintech industry companies like Flutterwave enhancing cross-border transaction, cash flow planning tools. You have better financial insights for timely business decisions. Moving on to return on investment on fintech adoption. Cost reduction, as earlier explained, is very cost effective. You don't need to pay much going to banks or having somebody do it for you. You can do it easily with yourself using a mobile app and any other fintech tool at your disposal. Revenue growth, more sales via BNPL, which is buy now, pay later. Like I said earlier, Easy Buy. Normally, nobody will want to purchase. Not normally, sorry. Somebody who is earning, let's say 50K, would not want to purchase a phone of 150K because obviously it is times 3 of his income. So the buy now, pay later platforms like the Easy Buy would not provide the structure for him pay in, let's say, 12 installments. You'll be able to get this. What this does for SMEs is it now increases their sales. People that want to purchase their products will now be more. I don't have it now, but then I'll be able to pay it later through a structured means of payment. Time savings is also part of it. Faster payments, customer retention. If I'm able to do my thing faster and easier, it simply means I would always want to run to you. Humans always crave comfort, they crave speed, they crave accessibility. So once you're able to provide them that, they will want to stick with you throughout. And that is what fintech does. They always look for these things in order to offer to their customers. And that is why till these days, most people prefer to use fintech rather than the normal bank. Moving on to how fintech improves financial inclusion for SMEs. I think it's almost a repetition of what I've said, but for the sake of the presentation, accessible services. We're talking about lower transaction fees. You don't need to pay much to do a transfer. There was a time they were not even charging for transfers. You just do your transfer for free. But I think these days, there is an amount you have to pay, a little token for transactions. We also have geographical reach. Through fintech like your Flutterwave, you can now do business with somebody that is outside of the country. You can now send him money, receive money, and all that. faster onboarding, simplified KYC, know your customer is also available. And participation in global trade. FinTech has also enabled SMEs to participate in global trade. Now, how FinTech can expand SME access to capital? How does it do this? Alternative credit scoring. Alternative credit scoring. Normally, I think if you want to obtain loans, what they do is they evaluate your credit score. They want to know your credit score. Your credit score tells them about your ability to repay the loan that that you are seeking from them. Because loaning has to do with business, of course. Nobody wants to loan money to another that they know the person will not pay back. That is bad debt. It's something that is not recoverable. So they look at your credit score in order to know your ability to pay back. So for SMEs, there is now an alternative credit scoring where they don't just look at what the traditional bank will look at. They look at several things that you've engaged in, several transactions, and then they present it to the loan company, giving it a detailed, account of how or your ability to pay back the loan you seek. So that's in a way has also enhanced access to capital when it comes to SME. Faster loan approvals. Of course, if I'm able to evaluate your credit score, there won't be much delay in terms of approving your loans, unlike the traditional banks that we do have. We also have lower collateral requirements. Most people are rushing to loan money from loan apps because of the lower collateral requirements, of course, crowdfunding and P2P lending. We also have venture capital attraction. Now, what are the regulatory framework in Nigeria that help regulate this? Now, there is no, in quotes, FinTech Act in Nigeria. There is no FinTech Act yet in Nigeria, although I would love to see something like that that is tailored specifically for FinTech. But despite the absence of this, there are some laws that do regulate the activities of FinTech in Nigeria. And one of those primary laws and body is the Central Bank of Nigeria. It helps regulate the activities of FinTech. Oftentimes, they rule out guidelines for FinTech for FinTech companies. They do that also for banks. The bank is heavily regulated. But for FinTech, in as much as some of them are trying to come up, once it is observed that a FinTech company handles an enormous amount of money, definitely there is need for regulation. Once bank collapse, it's damages the economy a whole lot, and so you cannot leave FinTech unregulated. And so the Central Bank of Nigeria is there to play the big brother role in terms of regulation. You also you could see an example from their cashless policy too, their licensing framework when it comes to those that want to start up FinTech and all the rest. Nigeria Data Protection Bureau is also there, your NDPRO. Once somebody is starting a FinTech company, obviously, it means the person is going to deal with data, the name of your customers, BVN and what have you. They will deal with data. And so the NDPRO is there to regulate how this data is being used, how it is being managed to prevent it from breach. So despite the absence of a FinTech Act, in quotes, the NDPRO still plays a crucial role when it comes to regulating FinTech in Nigeria. Moving on to effectiveness of Nigeria's FinTech regulation, you're looking at the innovation. We have sandbox, licensing contracts, startups, and customer protections like data privacy, as rightly said, AML rules in place, limitations, enforcement gaps, plus slow response to fast tech group. Slow response to fast tech group, enforcing these laws that have been in place And the fintech industry is such that almost every day there is a new innovation. There's a new innovation. But unlike the laws we have, it takes a lengthy process to pass a law. So before you pass this law that regulates fintech, the next day they have another innovation. And so the enforcement gap in terms of enforcing these laws and even the laws that have already been made, in a way, are still struggling to keep up with tech growth as regards fintech. So moving on to why compliance. Compliance builds trust with customers and investors. When you do comply with these rules and regulation, it protects against fraud, money laundering, and cybercrime. It prevents penalties or shuts down from regulators, enables sustainable growth and global expansion. All these are benefits of um, complying with the statutory frameworks as regards fintech in Nigeria. Regulatory challenges, like I said earlier, no unified law. We do not have a fintech act in Nigeria. We do not have it, but what we have are various statutes and regulatory bodies that help
Sorry,
curtail the excesses. Hello, sir.
yeah, sorry to cut in. Please, we'd like for you to kind of hurry up your presentation, seeing that we have another group that is also going to present. So please, if you can, we'll really appreciate it.
Okay. All right, sir. Okay, sir. So I think the slide is already there. So let me just move down to recommendations for fintech and SMEs. Fintech strengthens there should be strengthened compliance programs regarding your AML, your KYC, and data security. Collaborate with regulators for clarity and trust. I believe once an innovation is made, there should be a collaboration, even if there is no law in place to regulate that, between the fintech company and those regulators like your CBN. Much investment should be done in RegTech. Design customer-centric solution for SMEs, obviously, and then continuous monitoring ROI, return on investment, and adapt strategies. So basically, that sums up my presentation for Group 1 as regards fintech adoption for SMEs. Thank you.
All right, thank you very much, Peter, for a very wonderful presentation. It was very detailed, and well done to you and to your team for putting it together. I really do appreciate and see your efforts and see the efforts of the team. So please, can we have presentations from Group 2 very quickly? All right, we would want that to be as fast as we want that to be as fast as possible so that we don't waste any time. Is the group presenter for Group 2 available in class?
Yeah, sir. Yeah, I'm available, sir. A moment, sir. I'm trying to share my screen.
All right, thank you.
A moment, please. All right, can you see my screen, sir? Hello, can you see my screen?
Yes, we can. Sorry, did you hear me? I said we can.
Hello, can you hear me, sir?
Sorry, we're not hearing you, but we can hear you right now. Please
All
go
right.
ahead.
Okay. Yeah. Can you see my screen?
Yeah, yes, we can see your screen.
All right.
We can.
I'm Abdulaziz, and my group and I, we work on fintech, digital payment infrastructure, finance inclusion, and fintech in Nigeria. We all know that fintech has come to stay in Nigeria, and this is the biggest. Fintech is the biggest revolution to Nigeria atmosphere. However, there are challenges this fintech is facing in Nigeria, because Nigeria, as well known, Nigeria is a developing country, which means that our infrastructure is not actually helping the fintech industry in Nigeria. Um, Fintech in Nigeria is facing issue regarding infrastructure. In Nigeria, we have a lot of places whereby network coverage is not actually reaching, and we have a lot of uneducated Nigerians that do not actually trust this fintech already in Nigeria. And fintech industry as one of the fast growing revolution in Nigeria, they are facing this issue, and this issue is dragging the fintech backward. However, fintech industries, they are trying to bridge this gap of infrastructure problem and financial inclusion in Nigeria. They have put a lot of measure in place. For example, fintech actually they adopt a method which helps trader to connect directly to agents, which means the all these money point agents, they are now everywhere. They can easily access, whereby traders can actually go to them whenever they're having financial, like they want to make financial transaction. That is one of the things fintech industries have been doing so far. Another thing that fintech industry have been doing so far is to actually restore the another thing that they're actually doing is to make sure they plant trust in this program in the minds of Nigeria. Fintech industries, they are now having issue regarding urban areas in Nigeria, because the urban areas, they have strong internet connection, they have electricity, they are high financially literate, whereby, however, in the rural part of the country, whereby the connectivity issue is the bigger issue, they are having issue with the rural part of the country based on this connectivity issue and high rate of uneducated people living in this part of Nigeria. So fintech has played a lot of role in actually helping the situation. Number one, they help trader and transport worker to make fast payments. Money Point is trying, OPay is trying, PanPay is trying. Traders, petty trader, SME, they are now making fast payments. I.e., if you go to market now, you can easily make transfer to a trader in the market, and sharp the transfer will actually land, the alert will land. Unlike before, that all these financial institutions, all these commercial banks, when you make transfer, my first presenter said it, you have to wait for a couple of minutes before the alert actually entered. Another thing they are doing is enable utility bill and airtime purchase. A lot of people, like around now, it has been very long. I've come across recharge card on paper. A lot of individuals, a lot of Nigerians now, they are buying their data on OPay, PanPay, MoneyPoint, and the likes. Another thing is utilize a large agent network. Yeah, I've said it earlier when I was making my introduction, that agents now are now everywhere for fintech industries, whereby petty traders can actually like have access to agents and tendered and make fast transaction with them. So um, in short, we have our challenges there. The challenges are facing inclusion of fintech in Nigeria. I've said it earlier: poor infrastructure, low level of financial and digital literacy, mistrust among the people, fraud, fake transaction, and hidden charges. Now, some fintech platform, they are now charging for per transactions now, which actually like reduce the numbers of their patronage. Unlike Money Point, that you can actually make transaction and that and the likes with no or very little charges. Another thing is cyber security and data privacy. FinTech actually has a large number of data. Every Nigerians that actually bank with them, they have their data. So people are very, very skeptical when it comes to banking with FinTech industry because they know that they are going to be exposing themselves to these industries whereby they don't actually see their physical structure. They don't see their physical headquarters. This is purely online, purely on air. So a lot of people are very, very skeptical when it comes to like banking with this fintech industry. However, fintech industries, they are trying a lot when it comes to cyber security. That is why they introduce a lot of authentications, inscriptions, biometries. All these are measures to actually cope with any form of cyber attack. So on fintech industry, it's not only Nigerian infrastructure that is actually like contributing to the issue or the problem fintech industries are facing. Another thing that is contributing to it is a social factor and economic factor. When it comes to social factor, Nigerians, we have high population of uneducated Nigerians, so they are not they don't trust because they don't understand that their money and their data is well protected. They don't trust all these fintech um, mm, companies because they are not like well educated in lines of maybe due to their financial illiteracy. Another one is our economic factor. You understand? Our economic factor, a lot of traders, they earn very little to the extent that they see it on unnecessary to bank the little they are earning. So that is another aspect. That is another reason. Uh, that is another problem the fintech industries are actually facing in the country. So our remaining challenges for fintech industry to tackle in Nigeria is um data's smartphone, all these gadgets to actually like bank with fintech industries, they remain expensive. They remain expensive for people to actually like purchase. A lot of individuals, whenever they don't have data on their mobile phone, they find it hard to actually like make transaction. However, some fintech companies, they are now introducing SMS form of transaction whereby you'll be using your USSD code and you receive alert or debit from them through their SMS. Another thing they're actually facing is um, fraud and debt risk. For example, PalmPay has this loan. The loan aspect of PalmPay is now actually paying off. People are finding out to actually pay it, and when the date for the payment of these loans lapses, a lot of the interest accumulates to the extent that people find it hard to actually like pay uh pay off. And another thing is because their loan and everything is very, very easy to access, people like get very most people are exposed to debts and a lot of things. So recommendation from our group is to actually move Nigeria forward. Nigeria need to expand. That is to the government. Nigeria need to expand their electricity and broadband infrastructure. Like internet coverage must like the government should do something about the internet coverage in Nigeria. Where so many states in the north and so many states in the east are facing issue of internet this thing. Strengthening, there is no any particular law for fintech. Yes, there is no particular law for fintech now. So government should enact a law to strengthen data privacy regulation in Nigeria. So Nigerians will trust the fintech industries more. Once they know that there is a law regulating this, they are going to trust the fintech industry more. So in conclusion, fintech industry is bridging the gap between Nigeria financial problem to Nigerian financial freedom. Many people now, they are finding it very easy to banks to store their money, even to actually do businesses with their money, because the money is saved now, the money is easily accessed now, unlike before that whenever you have issue you have to go and queue in commercial banks, to be facing like a lot of issue and trauma and anything. Another thing, fintech is the biggest evolution to Nigeria economy and Nigeria at large. So that is
Thank you so much, Mr. Abdulaziz, for thank you so much, Mr. Abdulaziz, for your presentation. We appreciate your shared thoughts in class today. We appreciate your shared thoughts in class today. So what we'll be doing right now is, okay, I think we have Mr. George in class right now. Thank you so much, Mr. George, for joining in. But what we will do firstly is we'll take feedback from Mrs. Mariam, right? After she's done with her feedback, then we'll get back to Mr. George for him to give us feedback and just highlight some points that he had in mind to share with us while he prepared for class. Right. So please, we would like to firstly call on Miss Mariam for her feedback to the presentation. You're welcome back, ma'am.
Okay. Can you hear me?
Yes, ma'am, we can.
Okay. So first of all, thank you very much to both the presenters for the first presentation and the second. I think I'll just give feedback on both the content and the outlook. So for the first presentation, well done to you on, trying to teach us more about fintech adoption and the impact on SMEs. On the presentation flow, the feedback is that it's kind of disconnected. So it was a bit difficult for me to follow. I wasn't sure what exactly you were whether you're focusing on fintechs or the business models or the impact on SMEs. I'm guessing your topic is fintech adoption and the impact on SMEs. So I'm expecting to see maybe a little bit about how the adoption of fintech in Nigeria and the direct impact on the SMEs. I know you talked on that, talking about how they are able to access loans, which is easier for them than through the banks, and how it has also made business better for them. But next time, just make sure that there's a flow, because I think at some point you're talking about cybersecurity, then you're going back talking about fintechs and all. But good job on putting it together, to the entire team for researching and putting it together. Also, in terms of how the presentation looks, try to do maybe more images than text, so less text, so that the people who are listening are not focused on reading the entire text, but focused on what you're saying. So it's to focus more on doing a good job of talking about what you have in your presentation, but less text, right? Maybe for any other presentation that you might need to put together. Then I think you also mentioned PayPal. I wasn't sure why PayPal came in. I think you're talking about how PayPal has maybe sort of helped SMEs, in terms of payments. But I know that PayPal has a lot of, issues around how it works. And I don't think a lot of Nigerian businesses adopt it. I don't even think PayPal works in Nigeria. So I don't think merchants and customers are able to use PayPal in Nigeria. But good job to the team. Well done, in putting the presentation together. At least I was able to see you were able to really talk about how the impact of fintech adoption has affected SMEs. Then for the second presentation, your topic was around digital payment infrastructure, financial inclusion, and fintech in Nigeria. I don't know if it's the topic or it is how the topic is interpreted. Same thing. There's some sort of also disconnect in the flow, going from one topic to the other. Maybe if the topics are a bit more simplified, that might also help. Then in terms of the visuals, I don't know if it was difficult for me to know where to focus on, whether it's the text or the background of how it was. So as much as possible, try to allow your presentations to be clean and simple, and people can maybe just focus, maybe your images are saying more about what you want to say. There's a lot going on in terms of your visuals as well. Just always make sure that your layout, your coloring, everything is as simple as possible, right? Let people pay attention more to what you have to say than focusing on the presentation itself. It had a lot of text. But in terms of also talking about, financial inclusion, I also used that while I was doing my own presentation. Good job on that. I think you mentioned about poor infrastructure. So food for thought for you too. The same people that are unbanked, do they even have access to smartphones? Do they have access to the same internet to know how much data is? So is the problem really poor infrastructure? You can develop payment platforms that needs little to no internet or smartphone, because the same people are trying to target probably cannot even afford some of these things, right? But good presentation overall, and well done, to the team. And for the same unbanked, with the current situation of Nigeria, another food for thought is, do they need another payment platform, or do they need a platform that helps them to, to access to more disposable income, right? So how can they make money? Maybe that's what we should be focusing on before they can even use the payment platforms that we're trying to provide for the same unbanked. So thank you very much. Well done to the team and to everyone.
All right. Thank you so much, Mrs. Mariam, for your thoughts and your feedback. So we just want to quickly head over to Mr. George. You're welcome on board, sir. We are happy to have you in today's session. We just want to quickly hear from you, share some of your thoughts that you had prepared for us as regards this class. And then after that, we'll take questions from the mentees and we'll call it a day. So please, can we have Mr. George, sir? You're welcome. Mr. George, are you with us?
Yeah, can you hear me?
Yes, sir, we can.
Can you hear me?
Yeah, we can, sir.
Oh, okay. All right, that's fine. Sorry, I'm on the road, so I just wanted to be sure you can hear me. My device. Well done to everybody. And it's great being part of the session again. It's been a bit, and it's very refreshing the level that we keep taking the mentoring sessions to. Um, Very very. I caught just a little bit around the some of the things the um, first mentor shared. Very very spot on. The presentations were quite deep, even though they were quite broad. Um, to the general organizers now, I think that it might help if the topics are kind of unified, sort of, so it could help streamline so that they either, I don't know if it's deliberate where they are presenting the various different topics. I don't know if that's deliberate. I know before you used to have the different groups present the same topic, and then they probably take it from various angles, but it seems like the model now have like them presenting different topics. But I think that they did a good job, even if the nature of the topic forced them to be a little bit more broad. So just like the mentor commented, Marian, it was hard to narrow on a specific area, because there were quite a number of things that both presentations touched, particularly as it regards to the adoption of fintechs vis-a-vis and the business models. I mean, the first presentation spent a lot of time around business models. At some point, I thought that was the topic they were actually presenting, and I had to check again and see they were talking about adoption of fintech. So it's quite looking at it from the angle or looking at it from the lens which they try to address those topics with. They did quite a good job, but it might help if the topics are a bit more streamlined, probably to help make them more focused, even in their own presentation. But good job so far. I think I wouldn't take a lot of time. I probably just touch on maybe one or two aspects to just add a little bit to what has been shared, and that will probably be starting with the aspect of the business models and the adoption of fintechs, right? A lot was said around, different business models, different things that fintechs are doing, and I think the last thing that Miriam said was, "Do we need another payment fintech?" Can't put it exactly the way she put it, but really, do we need just one more fintech for the sake of having a fintech, right? And it comes to a lot of times people don't ask the why. Why are we doing this? Why are we going into this business model? Whether you're looking at the fintech model from an angle of the particular service or the particular product offering, or aspect of the bank. I like the word somebody used, say dissecting banking services, right? Whether you're looking at it from, you want to do digital lending, you want to do payments, you want to do escrow services, whatever it is that you want to do, or whatever subset of the fintech space that the person wants to do. What is the why you're doing it? What is the missing piece you're bringing to the table? Why are you adopting that model, right? The target guys that you want to serve, why do you want to target those particular sets of users? Somebody mentioned around OP's model of not charging for transfers some time ago, and now that they are charging, why did they operate with that model where they were not charging for transfers and they are literally taking a loss for every transaction that they were doing? So a lot of times people just see some fancy things a particular fintech is doing and just try to replicate it and say, "Hey, Kai, get one or two engineers and let's start a company, let's start a fintech, and then let's do payment." And most of the time, it's just out of sheer desire to just do it, rather than from the point of there's a gap in the market. This is what the data is saying, and why we think that this gap needs to be filled by this particular unique value proposition. So it is not driven a lot of times by that, and that is why you see a lot of the fintechs that have come up, right, have also faded away, right? So we need to, more or less look at the why that particular fintech, why that particular product, why that particular services. What gap are you exactly addressing, and what is the data that is supporting that gap that you want to address, to say there's going to be demand for what I'm about to bring into the marketplace, and I'm going to be able to fill that demand with this value proposition. So it is a very important aspect of that whole adoption, because people look at how fancy things are rather than what value it is to the customers. The reason why the earlier fintechs had high adoption was because they were solving a very huge need or a very huge gap in the marketplace. The reason why the likes of OPay or the likes of Money Points became popular was because those small businesses, for example, needed to be able to validate or confirm transactions quicker, so that they can be able to give value to their customers waiting or standing right in front of their shop trying to get what they have paid for. And instead of struggling to wait for whenever they will get SMS alerts from the bank before they give the guy that have paid money right in front of them, somebody provided something as unique as timely confirmation of transfer. No other special value, just for something as simple or something that looked or seemed simple as when I transfer money, I am getting that notification almost immediately. Took off a particular or took off some set of particular fintechs, and that became like a major part of how guys like MoneyPoint blew up and became like the next thing to SMEs, the likes of OPs and the likes of Pampies, right? Most businesses, especially the small businesses, you go to their shop to pay, they rather give you either an OP account number to make transfers in, or give you a MoneyPoint account number to make transfers in, or Pampay. And simply because of what someone mentioned, how quick it is to confirm transfers. No other quote unquote sexy future, right? In the application, it's not an app that gives you sexy feature. It just does one simple thing: tell me somebody has paid me timely, almost by the second. So when you identify the exact value or identify the exact gap that you want to fill in the marketplace, and then determine the value you're bringing along to fill that gap, then you have a very huge chance for significant adoption, and of course huge chance for success. So what drives fintechs and what drives adoption of fintech services is mostly driven by value, right? And that is the only thing that can keep you as a going concern, and not some sexy features or some business models just for the sake of it. So I just thought to bring that angle to the conversation, so that we always keep our minds and our thoughts well focused whenever we are thinking about going to play in that space, or whenever we are looking at fintechs and how they are either doing, whether they are growing, or whether they are whether they are penetrating the market. Always keep an eye. Why are these guys, doing well? What is the value proposition they are serving the market with? What gap are they really addressing? With the market, right? OP came into the country and addressed a major gap, especially in the informal sector and the mass market, right? Removed all the layers of compliance requirements and documentation you needed to use to open the bank account, right? And people, by a few clicks, opened the bank account, and that is one of the major value proposition or major gaps that blew up the likes of OP. So sometimes it might be as simple, as just identifying where the friction that exists in the marketplace that we can feel, rather than it being about the sexy features or the beautifulness of the app, or how nice the logo is, and all the or how crazy the business model is, or what business model it is that you're doing. It is more about what gap is there in the market that I can actually bring a value to fill that gap with, and that will lead to the adoption of whatever fintech service you're bringing into the marketplace. So just want to add that angle to the conversation. Yeah, thank you.
All right, thank you so much, Mr. George, for bringing that perspective and contributing to the overall discussion that we are having today. We really did enjoy your shared thoughts. So please, we would like to quickly take questions. Right, we'll take a few questions and then we'll call it a day in class. So please, if you have any questions you'd like to ask, to just further drive the conversation, or to clear out misconceptions where they are, right, you can just kindly go ahead and raise your hand. I'll do well to call you, and so that you can for your question. So please, can we have questions from the mentees? Do we have questions? Do we have questions? Do we have questions? I expect that we are supposed to have questions, right? This is the business aspects to fintechs. Why do they do what they are doing? What needs they are trying to address? I'm sure there are certain questions that we may have in regards to the topic for today. All right, so please let's go ahead and feel free to ask questions. Do we have any questions? Okay. So it seems we don't have questions in today's class. All right. So in the absence of any question, we would want to say a big thank you to Mrs. Mariam and Mr. George for making it to class today. We want to thank you for your time and your shared knowledge in this session. We really did enjoy it, and we really do appreciate. We really do appreciate. All right. So just before we go, as is within our practice, please, for the mentees, you can kindly turn on your videos. Let's quickly take a picture. I have my camera turned on the second device. All right, so let's quickly do that. Let's turn on our videos so that we can take a quick screenshot. Thank you, Mrs. Maria. Thank you, Donna. Thank you, Adetola. All right, so I can see if your posts are turning on our videos. Please, let's quickly do that. Chiamaka, thank you, Chiamaka. All right, can we have more people turn on their video if that will be possible? All right, so we're done with pictures. Thank you everyone for making it to class today. We hope that you were able to learn a thing or two from what has been shared in session. Right, please do well to share what you have learned on your different social media platforms. Tag our mentors so that they also get to see that you are learning from them also, and we can just increase awareness within this space. Right, the reason what differentiates you from other people who don't have, but what differentiates you from others is that you have this level of awareness and you can bring them on board. You can start by driving conversations. You can trickle people's mind, right, with what is going on within the fintech space. And based off of that, even regulations and policies can now begin to form within this platform and within this sector. So once again, a big thank you to our mentors. Please do all enjoy the rest of your day. Goodbye from us here at JIIPCC, and see you all next week.